I just got done recording this and my mic wasn't on, so we're gonna have to redo it. As you can see, personal daily profit target hit. Boom. My personal daily profit target was 1,500, and as you can see, I'm leading on this count. So if I go to my other account, same thing over here. We're at 52.8, so not quite 53,000, but it does not matter because if we go to the performance stats, best day percent of total profit, 78%. If you want to pass your account, this needs to be under 50%. So I'm going to need to win tomorrow. And if I do win tomorrow, then I will be able to end up passing the account. If I pass the account, then I'm going to need to pay to activate it. I'm probably only going to activate one of my accounts, and I'm just going to let the other one sit because I do not feel like paying $300 to activate two accounts. If I do end up blowing this account, then I will have another account waiting for me. But anyways, let's just get over why I took this trade. As you can see, 30 RR, it's around 30 to, it was 34 RR right here. So boom, enter right here, exit up here. Real nice trade, real nice trade. My original trade, I was $150 in drawdown. So if we go over here, scroll down, hit the trades, I made $16.45 on this because I was down 15, or I was down 150. So yeah, my personal daily profit target 1,500, so I had to make 16.50. Anyways, let's get into the real reason why this trade worked out. So we have a sell-off around 8 a.m. It was 8:20. Nope, it was 8:25. So you have the 8:30 open. Doesn't really matter. I didn't mark it out at all, right? 8:30 open. Boom. We open right here. We just continue to go down. So I kind of saw this as the Judas swing because we have equal lows right here. You have an order block right here. So we sweep this liquidity. We have a bullish reaction off of it. We have this gap, boom, boom, come down, and we finally tap into this order block over here, right? You can see it, down candle before the up move. Once we come into that zone, the bodies do not go, the bodies do not close inside of the order block. As you can see, order block, this candle wicked down and then it came back up. So it's showing that possibly we could be going up. So you could enter right here. You know, it's a decent level. If we have my model, you take it from the high to the low. It's underneath the 0.236. You could also go down here as well. So this is the 730 low. So you have this high to this low, 0.236. Wow, what the heck? Anyways, it's not very consistent because, you know, you'd be like, well, why didn't you go from here to here? It's all narrative. It's all understanding. If it doesn't make sense, then watch more ICT. There is a time-based algorithm. Anyways, so boom. We tap into this order block. We wick through it. No body candle closures at all. So that kind of proves after we sweep out these equal lows, we finally tap into this fair value, untapped fair value gap, right? All of these wicks are very on the same line. Draw that out if you want. So this is where we finally get into this fair value gap. But underneath the fair value gap, we have order block. So once we tap into the order block, that's officially like the alright, get your guns ready. We're about to start shooting off. Boom, boom. Tap down into it. We have a huge retracement. And then we have this. We're on the 15-second chart, by the way. I'm on the 15-second chart. We have this inverse gap. So we have one. And then I also include the volume imbalance. So 1, 2, 3. We have a bearish fair value gap, and then what could have been an order block right here. So if we were bearish, I'm gonna try and let's put it over here. If we were bearish, right, as you can see, we have lower prices. Boom. If we were ultimately bearish, so we have a closer below here, we would, if we were bearish, make sure we're on the same page here, we would have came down, we would have came back up, used this order block to continue going down, because we also have this fair value gap. This is an order block right here as well. But we slowly come out of this area. We inverse the gap right here. And then we close or we open inside of the fair value gap. If this doesn't make sense, it's alright because this isn't where I entered. This is more for like confirmation of understanding that it is going to go higher. So once we finally break out of here, I wanted to see this candle. So we inverse it right here. I wanted to see this candle come down, use this order block. Maybe there's a volume imbalance here. Anyways, there's not. So let's just ignore that. So I didn't enter down here. We come up. We sweep. Not necessarily sweep. More of a change in state delivery. right here. We also have an order block right here. So this is a mitigation block because it's a failed order block. So a mitigation block, I think, is an inverse order block. I'm not too sure what a mitigation block is. I'm going to keep it a bug 50 with you, but I'm pretty sure that's what it is. Anyways, so we have it right here. We have an order block that's formed. So an order block, I take it from the open. So we opened right here, came down, closed right here. We opened right here, came down, closed right here. So this is the order block. So we're going to take this, we're going to draw it out. Boom, order block. So a down candle, and then the next, so it's normally 2, down, and an up move. That validates this order block. As you can see, after we close above it, come down, we wick into it, kind of accumulate a little bit, accumulate, and then we manipulate back into the order block. And then the next candle after we reach into the order block is a complete displacement, right? So this is like ultimate bearishness. So we have a BISI, or SIBI, sell side imbalance, buy side inefficiency. No, BISI, buy side imbalance, sell side inefficiency, because we're just going up on one side. So as we come down, we are currently accumulating inside of this area because we have the top of the order block right here, which is technically a breaker block. I'm not really the best at terms and whatnot, but I know what I'm talking about. I'm not really the best at explaining it to a new trader. So I really hope if you are a new trader that, number one, watch TJR's bootcamp, get an understanding on the terms. Number two, watch ICT's 2022 mentorship to kind of put all the pieces together. Also, ICT is uploading a video today, so keep that in mind. I do want you to go watch that. Anyways, so we have inverse gap right here. We didn't come down, use this order block, so that means like we're super bullish. This is a breakaway gap. As you can see, we make a fair value gap right here, a buy side imbalance, sell side inefficiency. This is a sell side imbalance, buy side inefficiency. But since we made it and then we inversed it, you know, maybe you don't. Anyways, we're just gonna keep on moving on. You gotta bear with me here. Anyways, inverse this. We have a displacement. We have an order block right here because we have the down move and then the next candle, 1, 2, over, so an up move. Let me keep this in mind for you as well. 4 seconds on a 15-second chart is equal to 1 candle on a 1-minute chart. So these 4 candles is also an order block on the 1-minute chart. So if we draw it out like this, we hit it from the open, we perfectly close at it, right? I didn't even notice this while I was trading, but I kind of just free-balled it. Anyways, so we have this order block. Come up, we wick into it, we accumulate a little bit, and then we come back down, sweeping out this. We retap into here, so it's a reclaimed order block. And then the next 15-second candle is a huge displacement candle up. So we have this fair value gap. We slowly come down. We're working inside of this fair value gap. And then once we finally reach this order block, the down candle before the up move, yes, every single down candle before an up move is an order block. You just have to understand narrative and bias in order to understand what the correct order block is. Anyways, so we come down. We wick into it. There's 3 candles right here. Indecisive, indecisive, indecisive. All the wicks are coming down, but none of the bodies are closing below this red line. The next candle, which I entered right here, and then, I got real close. My stop loss was at the bottom of here because we have this order block. This is like the rejection wick because we come down, we tap this order block one more time. So this wick is a very strong rejection block. So I just put it at the bottom. It was a $70 risk. If it wanted to come down and sweep this out, that's fine. Like, whatever happens, happens. Anyways, so we ended up going through here. We have a change in state delivery right here. So this should have been used as an order block to the downside, but we close above it. And then we also, what the heck? So this is now the new order block because it's a down candle, and then we ended up closing above it. So we close above it. We have a volume imbalance to the upside, so we come down, we fill the volume imbalance. Not only are we filling the volume imbalance, we're tapping into this order block. This is also a inverse fair value gap right here. But sometimes, especially on the 15-second chart, like, we inverse it and we never return back to it. So come up, change state delivery right here. Come down, fill the volume imbalance. Come down, tap into the order block. We don't necessarily go to this inverse gap, but we don't need to. We don't. If we're overly bullish, it's not going to give you the best entries. Like at this point, you might as well just press buy and just watch it go up. So I was playing like Rocket League or something. I was on my phone recording it. By the way, I said this in my other recording. If you want to join the Discord, link should be in the bio. If the link doesn't work, DM me on Discord. It's assiduous.nq. I'm pretty sure like most, if not all of you, are already following me on Discord though. Following me on TikTok, sorry. But yeah, so we have this 1 minute order block. As you can see, come up, boom, boom, and then we kind of have a mohawk here. Technically, we are allowed to close outside of it, especially when we're up this high, but like if you're down here and you know it's about to reverse, so right, this is when I started looking for reversals. Normally on the 15-second chart, as you can see, we have a sell side imbalance, buy side inefficiency, and we have an inverse gap right here. So you have the inverse gap, and then so we close outside of it, confirming that this is an inverse gap. We'll come back up, we tap this SIBI, this fair value gap to the downside. That allows us to come down, sweep out these equal lows, tap into this fair value gap, tap into this order block. Once we finally tap into that order block, we start seeing bullish reaction. You have an order block right here, we use it. Order block right here, fair value gap right here. As you can see, the body opened at the mitigation, what is it called? Mean threshold. The body opened just a little bit under. Like it's allowed to, yeah. It's allowed to do this, bro. Like I'm on the 15-second chart. It's called a mohawk. It doesn't have to be perfect, right? If it was perfect, then we would have opened up at the exact 0.5 level, but we didn't. So we opened up very low, as you can see. These three indecisive candles didn't really form inside of this order block, right? So these candles never really reached down. As you can see, the wicks did the damage, but the bodies of the candles kind of stayed above. The next candle, we have a volume imbalance to the downside. As you can see, we closed right here and we opened right here. So this is like, all right, bro. Like, strap up. We're getting ready to take off. We come down. We tap into this rejection block, also this order block. We don't come all the way back down here because this rejection block proves that this order block worked. So we use it once right here. We accumulate above it. We come down. We use it right here. We have this bullish gap. We accumulate inside of the gap. We have this order block right here. So if I were to just go like right here, as you can see, order block, fair value gap, come down. And we just happen to close outside of the mean threshold. The mean threshold is the midpoint of the order block. Consequent encroachment is the midpoint of a fair value gap. So as you can see, this purple line, I'm going to try and make it a different color for you. Maybe. Middle line, what's a color you can really see? See the orange line, maybe? It's kind of hard to see. But, so this orange line is the consequent encroachment. The consequent encroachment of an, how am I going to say this? Let me get this right here. Consequent encroachment is the midpoint of a rejection block. As you can see, that's like exactly what we were reaching for. We come down. We just go outside of the consequent encroachment a little bit of this rejection block. It's allowed to do that. The wicks do the damage. The bodies tell the story. Boom, we come down. This is the ultimate lowest point that we go. So I entered right here at this order block because it's the order block underneath the fair value gap. So I entered here. My stop loss was underneath this rejection block, right? So I was like, if it wants to come down, like it is what it is, I'll look for another entry at 10 a.m. if this doesn't work. I knew that we were in a bullish market though. As you can see, you zoom out. If you zoom out like this and you're like right here, you could tell that we're starting to work our way up. Not only that, we're at all-time highs right here. We made a new all-time high right here. So of course we're going to retrace a little bit. It's also the correct time of day that we retraced. And I just like, there's so many different things that added up to this trade that I knew it was going to work out. So, you know, 30R. Let's just go to the 1 minute real quick. See how everything forms on the 1 minute. So, on the 1 minute, we have a mitigation block right here. So, we're looking at this candle right here. So, we have an up move. This is a gap. This is a gap to the upside. And then we ended up inversing it right here. We inversed it. We come up. We use it right here. Allows us to go more to the downside. So we have a little up candle and then we have a down move. If we were in a genuine bearish market, it would have came back up the next candle. So you see this black candle. This confirms this is a bearish order block. If we were in a genuine bearish market, the next candle would have came up. It would have tapped it. Maybe it could have came up here, but the bodies relatively would not have closed above the midpoint of this block. Or you could even do the midpoint of this block too, because it's also an order block, because this candle right here closed beneath this. So that's pretty much a change of state delivery. So you have change of state delivery, you have an inverse gap, we use it right here, sweep it, boom, 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 right? It looks like we're in a bearish market. And then the next candle, we come up, we pretty much respect this. Like, we don't necessarily reach the order block, but we're using this rejection wick. Come down, right? So it's looking decently bearish. And then we sweep these equal lows. We have an order block right here. We have an inverse gap right here. That doesn't really matter, though. Once we close above this, it becomes a mitigation block. Because it's a failed order block, you could call it like an inverse order block. I'm going to try and get rid of all these extra lines. Boom, boom. We have these equal lows, fair value gap, 15-second order block. That's what I just got rid of. Once we disrespect this bearish order block, as you can see, we closed above it right here. The next candle, we come down, we tap this order block because, as you can see, a down move before the up move, that means this is an order block. So down move, and then we finally close it above right here. This is also an order block. Like if we go to the 5-minute, this will be one down candle, and this will be an up candle that closed above it. We have an ultimate change of state delivery right here, as you can see, through the breakaway. And then we form an order block on the 1 minute. Let's make it like blue or something. So you have two down candles. And then we come down, we tap this. This is a rejection wick because, actually maybe not, I don't know. Let's just act like we don't know what a rejection wick is. Okay, so you have change of state delivery. The second that we close above here, that makes this an order block, probably on like 5-minute. Let me just prove it to you. So this is a 5-minute order block. As you can see, down move and then an up move. So this closes above here, makes this an order block. If you understand bias, we come down the next candle and we use that. What? That's crazy. Even on the next, maybe not, I don't know. So we have an inverse 5-minute gap right here. I didn't even look at the 5-minute. I didn't look at the 15-minute, 1 hour daily. I didn't look at anything. I was just looking at what the 1 minute was showing me, what the 15-second was showing me. If this is confusing, I bet it is. But this isn't meant for beginner traders, I guess you could say. Like, I'm going to try and make a playlist for beginner traders. If you're a beginner trader, write this down. Watch the TJR bootcamp for terms. If you know terms, like if you know what I'm talking about right here, like as you can see, inverse gap, order block, change of state delivery. If you know what all that means, if you know what rejection wick means, like watch the 2022 ICT mentorship. That's where you should start. If you finish the 2022 ICT mentorship, number one, today is September 15, 2025. ICT is coming back to YouTube today. So I'm freaking jumping up and down with glee and happiness, you know. Anyways, we're going to go back to the 1 minute. So after everything that I just yapped about, all of the reasons why I think this market is going to go up. So we're on the 1 minute now. We finally come up. We clear the all-time highs. So this is the all-time highs right here. I'm also going to draw out the open of the top of the down move. So this is an order block on like a 15-minute. We finally close above here, right? So if you wanted a free model, here you go. And I'm not gatekeeping this because I don't even use this. 15, no. We're going to stick to the 5-minute and the 1 minute for you. As you can see, we finally close above the open. Change the state of delivery. We come up here, we sweep this, and we start accumulating. Why are we accumulating? Because we're at all-time highs and we're building orders. We're building more orders. We're trapping more people. We're especially trapping retail. Because if you're a retail trader, you're going to draw some random ass lines. You're going to draw some lines like this, right? Oh, look at this. We just broke through. We broke through the line. Let me short right here. Oh, boom. Oh, look at this. I drew another line. So technically, once we come back up here, just, you know, put a short limit. You know, stop loss or take profit right here, stop loss up here. It might have gone close to your stop loss right here if you're a retail trader, but as you see it coming down, you're like, oh, look, this line worked out. Nope. Nope. You have one single down candle right here. You have a slow, gradual move up. So I gave you literally all of the reasons I was looking at on why I think it was going to start going bullish here. So we ended up coming out, sweeping this liquidity. We accumulate right here. So let me just give this to you. Pause. That sounded a little weird. Accumulation. I was looking at this mid-time. I was just playing Rocket League, bro. I was literally playing Rocket League, and I saw that we were accumulating right here, and I was like, all right, bet. As you can see, if you go to my TikTok, I put my my break even right here. I was like, we're going to drop back down into this order block. This is too clean of an order block. If you, like, we're looking on the hard left here. We have a move up. We have one candle that moves down, and then we finally come back up. We accumulate, and then we finally drop down into this order block. So we did end up, the bodies ended up closing below the midpoint. I was going to say the 0.5. So the halfway point, the mean threshold of the order block. Mean threshold is order block and breaker block, I think. And consequent encroachment is for rejection blocks, which is any wick. Any wick is a rejection wall. Any wick is a rejection block. And consequent encroachment is also the midpoint of a fair value gap. If we were in the most perfect market ever, bodies would have came down, would have stopped right here, and that would have been like perfect, right? But this is called a mohawk. As you can see, we come down, we close out side of here. This wick is allowed to do this damage. It comes beneath here, but like that's to like ultimately fake people out. We also have a, I'm just gonna, yeah, y'all saw I hit 30 RR, 34 RR. Anyways, we have a 1 minute sell side imbalance, buy side inefficiency. So we have accumulation, manipulation, distribution. I'm gonna go ahead and delete this. If you were bearish and you saw that we were accumulating at these all-time highs and we finally break down and we make a gap, you would want to sell right here. So probably like short position, maybe at the top or at the start of the fair value gap. So you would have shorted probably like this, and it wouldn't have worked out for you. Why did it not work out? Because we respected this order block. The underlying order flow is ultimately bullish, especially because we're at all-time highs. One thing I was telling my Discord, I told them this on like Wednesday, Thursday, Friday as well. Like I lost on Wednesday and Thursday, but I won on Friday. I was like, it's kind of silly to short at all-time highs because like it's kind of weird because if we're at all-time highs, we're probably going to want to make a new all-time high. Does that make a little sense? Like ultimately we're going to have to, like one day in the future, we're probably going to be at like 30,000. The price line that we're currently at is 2426075. That's the current price that we're trading at. 10 years down the line from now, we'll probably be at like 40,000 or some crazy shit like that. So how are we going to get there? We have to keep on making new all-time highs. So I knew ultimately accumulating, manipulating into this order block, we distributed. That's why I entered this trade. I've been recording for 23 minutes. If you have any questions, you can leave them in the comments. If you want to leave a hate comment, that's cool. Like, go ahead, boost my engagement. If you have a genuine question, join the Discord. You can DM me. You could also DM me on TikTok. I do ask for any questions that y'all have. If y'all have any questions at all, even if it's like, what is a fair value gap? I might look at you like, bro, are we dead ass right now? But I'm going to answer your question. Like, I'm trying to help everybody out. So that's why I'm doing this shit for free. Probably at the end of the year, I'll do like a paid one-on-one mentorship to like really help you out. And I'm talking to you, whoever's watching this video right now. I would start getting a job right now. I would start working on your trading. You don't even have to. If you want to get a job and stack up bread, like just stack up a little bit of bread and pay me at the end of the year. And I will walk you through everything. You just gotta, I don't know. I'm asking for some freaking attention being paid right now. Anyways, we inverse this gap. Come down, we use, as you can see, the bodies didn't come below here. We don't necessarily reach this order block, but we do retap into this order block. You have the opening of the down candle. So you have the open right here. As you can see, we kind of, manipulated right here. We really dug deep into it, but we ended up pushing out. We ended up inversing this gap. So the bodies come down, it stays inside of this inverse gap, and we barely, literally one tick. You could have bottom ticked this whole entire move. Order block, opening of the order block. It's in there. Like, we could get real close, bro. Like, this is a bottom tick. You see that? This is one price. This is one tick. Literal one tick. Put a limit order right here. You might have gotten freaking spread issued. And that's not your fault. Anyways, what happens next? Whoa. What the heck? And you might be thinking, like, okay, let's use this freaking... I'm not going to go over why you could be looking for shorts right now. But we have a gap right here. This is a bearish gap. Let's get rid of it. Oh, look at that. Wait, hold on. Perfectly tapping the consequent encroachment. That looks decent. Anyways, we have a bullish gap. So if we were still bullish, we would have came up. We would have used this order block. But as you can see, we didn't. We disrespect this completely. So this is now an order block to the downside. So we have the two up candles for the down move. Up candle, indecisive candle. Next candle, we completely shit the bed. As you can see, we come up, we tap it. We tap the opening of the order block. Make another order block right here. And then we wick up into this inverse gap. Also, this is a decent shorting opportunity right now. I'm not going to lie. Yeah. Anyways, hope you guys enjoyed my 27-minute long video. I'm going to go over some shit real quick. Join the Discord. That's it. And follow me on TikTok if you're not. But I bet you that you probably are. Because that's how I'm getting all my traction, is through TikTok. Also, I'm going to keep it a buck. If you see me posting a car like a Porsche or a Lamborghini, that is not my car. I stole that shit. All of the executions that I've ever posted on my account are mine. I am a decent trader, as you can see. If we go over to my other account. 53,000. I should have passed the eval today, but since my best day percent of total profit is 73, I'm not allowed to pass it yet because this needs to be under 50. I guess I will know for a fact if I was able to pass it the second this trading day is over. The trading day isn't over yet. So, ultimately, I'm just going to come into tomorrow. I'm going to try and win. If I win, then I will have passed 2 of my accounts. I'm probably going to activate 1 of my accounts because if I activate both my accounts and I'm like copy trading and I blow both of my accounts, I will rip my hair out. I'm just kidding. I won't. But like, it would be a pain in my ass if I paid $300 for some activation fees and then it didn't work out for me. As you can see, we're slowly, gradually going down. We kind of just like accumulated. It's also 122. I'm going to give it a buck. This is a perfect shorting opportunity. Where's 115 at? 115, like, we're just slowly going down. This is a great short. If we're ever, this is some free sauce real quick. If we're ever in a situation where we're at all-time highs and you're just like, damn, like, why do we keep on going higher? Like, I think we would short right here. We have an inverse gap. We have a sell-side balance, buy-side inefficiency. Like, this is where you'd normally be willing to short. You're like, oh, we're oversold. If you ever think like that, wait until 1:15 in the afternoon. Wait until the afternoon to start taking shorts. That's all I'm going to say. If this doesn't make sense to you, I would rewatch it, write down everything that you have no idea what I'm talking about. For example, when I was just starting to trade, I had no idea what a liquidity sweep was. Like, what the hell is a liquidity sweep? But as I continued to trade, as I continued to learn, as I continued to consume content, I knew what a liquidity sweep was. So this might not make sense to you, but it's because I'm an experienced trader. I've been doing this for every day for a year consistently. It's September 2025. I bought TJR's mentorship in August of 2024. I'm not going to shame him, but from my own personal experience, I wish I saved that money. But I have a scar on my face. I got paid for that because of homeowners insurance. So I had a lot of money to just throw out the window. And I also wasn't really I wasn't trading every day. I was a lazy ass trader. So in the back of my mind, I knew if I buy this course, I'm going to need to make the money back. And I was thinking like, oh, I'll just make it back in a couple weeks. Nope. The way that I trade for complete precision. So as you can see, I took an L right here. I'm not perfect. But yeah, I've been trading every day for over a year. I still have no payouts, but we're freaking close, baby. Because I have 2 accounts that are on the verge of passing The eval. I have passed an eval before. I have a certificate with my first and last name on it. Honestly, I could die a happy man right now. I have a certificate with my first and last name on it saying that I'm a certified funded day trader. Bro, like what? I'm not the one to be the most prideful, but I did give myself a little pat on the back once I saw that. Anyways, I'm yapping now. If you have any questions, join the Discord. If you have any questions, text me on TikTok. No, I'm not giving you my personal phone number. That wasn't funny. My fault. Anyways, I gotta get a thumbnail for this shit. 30-minute video. If you guys watched until the end, comment the sunglasses emoji, like the cool emoji. Comment that, and you're a freaking legend. Anyways, thank you guys for 150 subs. It's been a minute since I posted a YouTube video. I'm gonna be working with my friends to make a beginner day trader course. So if you want to help me make that course, ask me any questions you have. Anyways, that's it. Thank you for watching. Thank you for listening. I hope I didn't make too much confusion for you, but I hope I cleared it up. I'm pretty sure I did clear it up because I went over this whole entire little spiel for like at least 10 minutes. This is the fair value you got. This is an order block. I shouldn't even be explaining that to y'all, bro. I should be making like a 3-minute video like, all right, guys, I saw this fair value gap. I saw this order block. I entered long. As you can see, I took a take profit up here because it matched up with my personal daily profit target. We kind of accumulated below the new week opening gap. Also, there wasn't even a new week opening gap. I don't know why I'm talking in 1.5 speed right now. I'm talking hella fast. What's going on? Anyways, new week opening gap didn't even freaking happen. We didn't even get a gap. So, yeah. Accumulated below. Come up, up. Come below. As you see, London sell-off. London manipulation. We have accumulation during Asia. Accumulation to the upside. Manipulated below here. Take out these equal lows. Real quick, I want to see something for my own terms. This is my other trade that I took on Friday, which allowed me to make 2,200 across 2 accounts. So I made like 4,500 on Friday. That sounded like complete dickhead, but I was stretching. Oh yeah, something light. 4,500 on Friday. Nah, this is the trade that I took. We have a 1-minute order block. As you can see, we wicked into it. Let's get down to the 15-second. Zoom out. Anybody who skipped my video after I said, all right, I'm done, y'all just missed out. So we have this. I think it was a 15-second. Why did I? Volume imbalance right here and a volume imbalance right here. Let's get that real perfect. I'm pretty sure I did it with the magnet, though. I would recommend using the magnet because it helps for ultimate precision. So we have it right here. As you can see, market open right here. Coming down, we inversed it, we used it. And then we have an inverse something. Oh, that's beautiful. I didn't take that trade? Damn, that's a beautiful. Oh. And yeah, I took this trade, though. As you can see, bodies are respecting the consequent encroachment. We're inside of this 10 a.m. Newswick. You have an inverse gap, volume imbalance, order block breaker. Oh, dude, this was a beautiful trade. And then I bought in one right here. And then I bought in another at the volume imbalance order block. So volume imbalance, order block. We also have this. Let's draw it out real quick. Just for completeness sake, as ICT would say. Of this inverse gap right here. We don't come back down and use it. Oh, yeah, we do. Another bottom ticker. But I bought in one right here. I bought in another right here. I took my profit at these highs just in case, because I wasn't going to sit down with freaking 2 contracts and let it hit my stop loss. So I took one off right here, and then I let it come I let it go all the way up to here, and I perfectly ticked it. So I didn't have to sit in this trade. Ticked it, and then it started going down. It obviously would have ended up hitting it, but I'm glad it didn't. That was a beautiful trade. Just trade win percent, profit factor 2 point, like it's looking real good. All glory to God. I just want to say I'm 1 week sober. I don't want y'all's pat on the back, but it did help me with my clarity. Like what the freak? I have so much more clarity now. Actually, honestly, I don't even feel that much different. I'm keeping it a buck. I was smoking all day, every day for like at least 2 years. I did not go for longer than a week without smoking, and I don't feel any different. So times are real tough. It's a great time to turn to God. I'm sure y'all are believers, but you gotta really find it in your heart. I'm not gonna go too crazy on the religious stuff because I know some of y'all don't either support Christianity or like believing, or y'all are in different religions. All I'm gonna say is that looking to a higher power could really help you during these tough times. That's all I'm gonna say. I've been recording for 35 minutes. Thank you guys for watching. Uh, if you made it this far, comment 2 cool sunglasses emojis. And I love y'all. Have a bad day. Fuck y'all, actually.